Good morning, everyone, and welcome to the European crossover webinar. And we are seeing indices still restricted in this tight range. I mean, this is just an unbelievable tight range we're seeing here in Nasdaq. Look at that. It's just going absolutely nowhere. We have seen crude pull back, and we saw that move yesterday, but I mentioned, it still has to close above stay above it. Although it made that afternoon move, but to me it looked like it was contrived. I know people getting bullish on that, but yesterday I did note, watch out. Don't chase it. It's got a high of 68.44. Actually try to adjust this. You can see it more clearly on the 2-hour chart. Some wick stabs here. They came out at 68.44. I think we got up as high as 68.55, I think. I can take a look here. 68.53. But you can see this market's rotating lower. And to me, I think if you look at it from a, I can take a look here. To me, it looks like as if it's just a big reaction to a market that got very, very oversold. And when you look at it, I think from a bigger context, I wouldn't be surprised eventually if we do come back down towards these lows to test again. Down here, if you look here, a big old move like that. This was pretty big move here. We drop again, and this is a concern here. We came up here, we break low here, we take another extended move. This was pretty good push down here. It actually went with a $61 handle. And then we see this sharp rebound, pretty good sharp rebound, but to me, and that was one heck of a strong rebound. If you look at that, I mean, that's to the tune of almost $7. So I think we have to come back down here. Still think we'd probably have to test potentially down here at 64.92, but I wouldn't be surprised if we end up having to do a little bit more work here. But to me, it just seemed like it was a bit overdone here. And if you look at this, of course, now I've moved it to a 3-hour chart. Trying to get an idea if we can see the movements better. And we're still moving lower here. But you see this key was still the 67.95. And to me, it looked like it was just forced here. We saw a pretty good pullback yesterday. Then we come back right here. But we're still sitting at the 67.95, and to me, it just felt like they just goosed it here and just got some people to get stopped in, or goose their stops and force them to cover. And I was surprised it made it up to here, but and there was still an area here. But when we looked at the wicks on his side, and I have to look at the 2-hour chart, it was had 68.44. We did make it up to 68.53, and from there we kind of just slid back. You can see here, although it was quiet trading here, but you can see here the market was coming back here, and then people just basically got stopped in. We'll see what happens, but I kind of question it. It just seemed like it was just a stretched move. And crude will do that. It gets way overdone, and then it pushes a little bit more. And sometimes you see this fake out moves in crude oil where, okay, it looks like it's going to fail. It comes up here, drops back, and it gets people one more time again before we come back. But it just seems like it's gone really excessively. And I think that we'd have to come back down, at least for now, come back down to challenge right here. That's, I think, 66.84, but it actually has a pivot at 66.91 that held a couple of days back. So I think we have to test lower and potentially probably come back here, which is actually going to be yesterday's low. Remember, I think it was 66.28 we had for a buy chart. I think they'll have to break that. And what will happen is if they do break here, they'll have to test this 66.93. And then anybody that got trapped long, they're going to take them out and push this lower. So we may make it down all the way to 66.28. I think people got a little bit too bullish too quick. Bear with me. But we've already lost $1. So we've already lost $1 from those highs. And crude, one thing, I haven't traded crude in a while, but I know that crude does this from time to time. These extra additional fake moves, it's just like you're so frustrated, that's it. And then maybe it even catches some people going long, and all of a sudden it comes out. There just wasn't enough work down here to seek out value. And that's one good thing where the profile will help you. It's just that we'd come down here and when we rallied up here, we had stepped down to I think it was 66.91, and we bounced back really quickly. It was a real quick intraday, not yesterday, from the day before. And we came back again, and it just seemed like I said, I thought we were going to break that just yesterday easily, but they came back, and I think they just squeezed some people out. That's it. They got fooled. So now the market's vulnerable, especially after losing 67.95. That was the key. I said it in chat room. We just this market can't lose 66 to 67.95. And after reaching this 50%, that's huge. So it was going to have to do one or the other. You'd have to dip back, okay, come back and then dip. Or if we take up the 50%, which is, look at this is on a screen back move. Then if we do take this, we should have just took off and kept going up here to like 69.75, whatever. So the fact that we lost that really makes this market vulnerable. Take a look at gold. We're a little bit on the weak side here in gold. We did post that story about higher rates that we saw yesterday that we hadn't seen in a while in the bunds and I think Italian bonds and I forgot what else. But anyway, I said, be careful on some of these markets. I think that's going to cause a counter move. And I think that would be I said, it doesn't affect crude as much, but I think all these markets are suspect to a counter move if we saw that run up in rates. We'll see what happens, but even if you're bullish crude, this market has been put in a suspected position where, okay, you lose 67.95, then the market's going to look at it for anybody that's long above here, they're trapped and they're going to want to go lower. And once again, if you look at the profile, you're thinking, wow, we never really came back down here to find value. If the market would have dipped down to, let's say, even if it maybe not all the way to 52, but if it had dipped down here and then rallied back up, then you'd have something behind you. It wouldn't have been that much of a correction, but you have something. You didn't really even dip back. That's after a screaming run to 50%. After what was it, an $8 move? You rally basically straight up in 2 days. And you barely pull back and you take off again. Well, if you take off, then you really have to take off and squeeze a lot of people. Or if you slide back in, you make the market suspect for a lot of late trapped longs, or should I say trapped late longs. We'll take a look at what we have as far as news. We did get Italian industrial sales, and those came out a few months ago, and not anything of any real consequence. And nothing until we get into the U.S. session. We get continuous jobless claims. We do get GDP. And let's see, PCE prices, with consumer spending. And I guess we get the first opening of the Jackson Hole Symposium, which is probably just nothing more but singing and playing a couple of tunes, and that's it. The real news isn't going to happen until tomorrow. in the mid-US session and then ongoing, but I don't think we're still not going to do a whole heck of a lot. So we'll just move in right now to the analysis here. Tad bit weaker. We did push this euro up a little bit, but we're stayed in a relatively tight range. But after the news about the increase, European rates opened the door for us to move higher. We did move higher, but we're trading rather quietly right now. So taking a look at the euro, we had 1768. We did make it about high as 1773. We've had an okay run. The only thing you have to look for is because of the idea on European rates moving higher, that can offer a little bit of push. Of course, as we move into Jackson Hole, one would think the pound's going to remain rather dovish. That'll probably allow the dollar to weaken a little bit further. The key right now is going to be right there for right now, 1783. I don't think we see it today, but just going into tomorrow, that's the risk. On the downside, right there. 1728. And looking at the cable. A decent rebound here. We had 37.59 as a resistance. It did make it up to 37.66. I don't think we're looking for that much of a gain here. Well, same thing. We have to this is really more about as we come into the early part of Jackson Hole. We will give it some room, 37.81. That would be support here on the downside, 37.17. Onto the Aussie dollar. Still a good little rebound here. We're looking for 72.88 resistance. It made it up to 72.80. I still like this 72.88 for now. And on the downside, we'll go with 72.31. Moving into the dollar yen. Oh, we finally made this push higher. I still like 1022. Stick with 1022. We did get a little bit of above it. Oh wow, we hit right to the T, 1022. I still like it, even if it tries to go higher. That's still going to be the resistance. Doesn't mean we can't get above it. It just means that that's a key area there. Support we had for 924. Support then would be coming in at 997. Actually, right there, 993. Moving on to the cash dollar index. We had 92.76, low so far 92.80. I still like the 92.76. 93.57 seems to push, but that's where the real resistance comes in. We'll go and adjust that for 93.34. And on to Bitcoin. Oh, we finally saw this thing dip back a little bit. We had 47,183, but here's the big pivot right here, which is 46,370. It did get down to 46,256. We'll go with that big pivot that we had before. I'm actually showing this on the 2-hour. $46,412. With resistance right there, 47,854. And moving on to the S&Ps. I don't think any changes. Once again, this analysis isn't much to, I mean, it's not much work to do or to offer when we're just stuck in these exceptionally tight ranges. Look at that. So 4503 is resistance. Support is 4466, no changes. I mean, we're holding here right around the 78, I guess, around there, but this is where if we do break lower, that's where the support's going to come in. So no changes there. Same thing's going to be the case with the Nasdaq. I mean, this is just crazy how, look at this. This is just, you would think that was maybe I guess a 10-minute chart. I don't even know what to say. Not only maybe even a 15-minute chart at best. And this is a 2-hour chart. We're just simply not going anywhere in this market. You get a couple of little dips, but we're trading in such a tight range. Same thing here, 15,545. And that's at 161% of the most recent high and low. And on the downside, 15,271. And the low we've had so far is in the electronic session, 296. So not that far off, but that's still going to remain the same here. Gold. We talked about that 1812. We had it 2 days ago, and the market kind of ran out of gas here, and we've taken a dip, although I think this is more about that rise in interest rates. So we're still open to moving lower. I still like them pushing. They did make it to the 1788 yesterday, and they bounced up from that. Still think we can break somewhat lower here. We'll go with 1778. Still think this remains under pressure. And resistance will be 1802. Moving on to the crude oil. Well, we already discussed about this crude oil, and I just think that it looked like this move was just forced. When we came back yesterday, it put the market, and they were holding at that this pivot of 67.95. You can see pretty key level there. And if you look at the overall structure of the market, to fall that far, to fall $8 in pretty quick order, but even more so, or more impressive, to come all the way right back and come, think about this. We had a $61 handle and you rally all the way up to 68 and change. I mean, that is just huge. I mean, actually and I'm talking about from this move down here, where we fell, and we actually came back even further, but I'm talking from all the move from way back here, which was really just at the first of the month. We were trading at 70, almost $74. And look, we fell $12. And look how much then they turn around and go in and rally back $6. They come to this 50%. And I think this kind of caught some people off guard when it came back. And then I think this is just mainly people just getting stopped out here. And if they wanted to add on, they would have extended it way even further. So, but the key is losing the 67.95. That opens the door for anybody that was late, any late longs in, to end up getting, putting them under some pressure. And so they may have their stops rather tightly, and they may just go on and push this thing to test those stops. So we can still have the door open. We'll go with 66.52. I think this caught some people also because the high, I think was a 68.20 real quickly, and then we slid back. So for us to get back above 809 really, I think, spooked the market, and then that pushed us towards the close. We closed higher, but it's the electronic session plus what they like to refer to as a pit session. Well, there's not really a pit. Pushes and extended that out and really goose some stops to take us up to 68.53, and then us coming back here, we're sliding right back down. So we'll see how this market acts, but I think it's suspect at this point. They feel that the market has some trap longs, and they'll have to push this to go on lower to find value, I would think. So on the upside now, the key level going forward is going to be 68.37. And there we have it. The pivot right now still remains at 67.95. But like I said, this would turn everything around. If we got back up to 68.37, that would open the door for another leg up. Right now, it's got some homework that would have to get it back above 67.95 and hold and defend that. You can see if we fell back, we went right back towards that 67.95, and you can see here we languished. And this is a 3-hour. This is 3-hour bars. Look at that. And we just languished around that 67.95. Now we've opened the door in the European trade to push them lower. And once again, we'll see. But the market is very suspect. Where we could go on and test the 66.93. The pivot, it's actually 66.91, and they were trying to break them lower and get them down in here. We'll see what happens. But that's the bias chart here, and we'll get that posted into the room. And thanks for joining us here on the European crossover.